Ladies and gentlemen of the crypto space, we're live on a Wednesday, January 22nd at 11:35 a.m. We are 2 days into 3 days, 2 full days into an administration, a new administration, and that's exciting to say the least. There's significant changes that everyone is trying to process. Folks that are not in favor of our new commander in chief are digesting it. Folks that are in favor of our new commander in chief are probably in a sighing of relief right about now, considering a lot of what is going on, especially the shakeup at the SEC. That's quite extraordinary. Expect to see very interesting things out of Congress as well, given that it is a one party control of the entire system right now. Hopefully things get passed and things get passed relatively quickly. Um, we should all be in a position of increased comfort for us folks that are involved in the crypto space. I think there's a lot of reasons to have a high opinion of where we are right now. Certainly, where we're heading, the destination is much more interesting than the path. So the destination right now has become crystallized, has been solidified, has become even more interesting. The potential for what comes out of the SEC for clarity, the repeal of Sob 121 so the banks get involved. Folks look to the crypto space from a novice perspective most commonly, and they look at the price of tokens. But what they fail to recognize is the backdrop and the overarching structure of what is being created here. And that is exactly why I've talked to great lengths about emerging markets and how the crypto space is an emerging market of emerging markets. And I talk about these protocols as fintech enterprise because they're businesses just like you would have a business listed on NASDAQ or the S&P. So what does that mean in the context of the wall of money in traditional finance? These are businesses. These are businesses that are no different than any good old pizza shop, except they're dealing with foreign exchange, credit, derivatives, liquidity financing, and liability creation systems. Some of those, maybe even most of those, are inaccessible in traditional finance. You can't invest in a foreign exchange. You can't provide liquidity to a foreign exchange. You cannot own a liability bank, a liability creation protocol, but you can in the crypto markets. In traditional finance, probably the closest thing you can get is called the Eurodollar Bank. But then you got to understand what the Eurodollar system is. Then you got to understand what the hell the dollar is and how dollars are created. So there's a massive barrier to entry in order to, at minimum, feel comfortable understanding what the hell is going on here. But as I said, the destination has been crystallized, has been strengthened, and it is more exciting than ever. The path, nothing's changed with the path. The path is still shit. The path, we look at technical analysis. You don't look at the Bitcoin chart to understand the path. The path, literally visualize it. You got a road that's winding, and you picture the yellow brick road from Wizard of Oz. You're on a path, you got a lot of shit going on the path, and you got a destination. The destination is freaking glorious right now. The path is, as always, treacherous. So we look to the DXY and the move indicator to tell us the path, and you got a little bit of yield perk on the 10-year. I don't expect move to pop. Yesterday was very flat on the 10-year. I expect move to probably be flat, if not, hopefully roll over. When the hell is it going to roll over? At some point, it has to roll over. The whole system is dependent on it rolling over. The entire regulatory authority and agency of the U.S. is designed to make the move roll over. It is designed to suppress volatility in the treasury market, the most liquid and deep market in the world, as they always talk about it from the Treasury Department. You don't have a smooth functioning global economy with bond market volatility, US government long duration debt volatility. So that's pretty much destined to roll over. And when a financial crisis hits, that is literally where you see it. You see the spike in the move, period. Now, obviously, there's more to it. You got high yield debts and you got other junk, the junk debt market. You can see a volatility there. But the big market, the market that matters, is long duration United States government debt, because that is the debt that's used to print dollars. Uh, yeah, I'm not getting into it. I'm not getting into it right now. But that is a high level statement. That is the case. Now, the DXY has been flirting with 108. This is a very interesting situation that has kind of become clearer over the last couple of days, and this is the monthly candle. 9 days left for this candle body close, and this monthly candle is shaping up to be a lovely candle. This is a wick that is potentially even large, not necessarily like September of 22. This is a wick that looks to be a little bit larger than November and October of 2022. It's a big wick. It's not a John wick, but it's a big wick. So what does that mean? This is indicative of a shooting star candle, and this is indicative of a directionality reversal. And that means everything. I can't believe we got to one. Holy shit, we did get over 110 briefly. That was an intraday wick. And the system probably started capitulating. And this only goes down based on geopolitical collusion. Otherwise, the dollar, if left uncontrolled, the dollar would go up, 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 up and to the right. It would not stop going up. It is a recursive feedback loop of self-appreciation, considering the structure of the global economic system. So the only mechanical way for it to even go down is geopolitical collusion. It needs to be a concerted effort by all the nation states for it to actually go down, even for a period of time. So that's besides the point. All of that collectively results in a candle like this. And that is a hell of a shooting star. So that's why we look for the monthly close. We look for the candle body close, for the shooting star to be locked in. And then from a standard technical analysis standpoint, we're looking to next month. And next month, we want to see the close next month to be below the close of this month. And then you have additional confluence that suggests lower lows. And, we hopefully see lower highs as well. But a directionality reversal from here not only makes sense given the geopolitical, but also the domestic US political backdrop, new administration, and the policies and talking points of the new administration. What are their goals? They literally, the goals of the new administration literally scream you need a cheaper dollar. If you want to repatriate any supply chain, you need a cheaper dollar. It's mechanically the way relative currency valuations work. The reason why we exported everything out of this country was because of a relatively strong dollar. If you want to re-import things, you need to make the dollar cheap, such that international capital wants to manufacture here because they have a strong currency. That means they have greater purchasing power in the United States. That means they could use less foreign currency to establish and do the business they want to do in the United States. Relative currency valuations is a trip to try and understand. Once you get your head around it, basically it says strong dollar. You get inflows into financial markets in the United States, but you have capital outflows out of the United States for manufacturing and importation of goods and services. So you got the financial economy and the real economy to consider. So unfortunately, a weaker dollar is going to demonetize equity markets, United States equity markets. Capital will flow offshore into the emerging market trade. Capital will flow into foreign nation equities. And that kind of investment flow will start depreciating equity markets. So you're not going to be able to strike a balance. If you want to repatriate supply chain, you need to make it favorable conditions for U.S. manufacturing and U.S. export of goods and services, which requires the cheaper dollar. And the cheaper dollar causes capital outflows from US equity markets as leverage needs to be repaid because now the foreign currency is getting more expensive. Therefore, that's eating into carry trades. And this isn't just a Japan thing. And I'm not too worried about the carry trade because I think they have their control of the levers um, to such a degree that they understand there needs to be an organized and subtle directionality shift. They know this. Uh, the market doesn't panic when things move slowly. The market panics when things move fast. That's why historically you always have these VIX spikes and everything blows up. Of late, we've seen a big suppression of the VIX. It collapses right away. And that's exactly what the regulators understand. If you keep the volatility low, the system has a capacity to adapt. It sees the change in market activity and okay, it unwinds some stuff. It unwinds a little bit. It unwinds a little bit more over time. It's not like you get a 10% rise in the yen and all of a sudden, 5-year carry trade position is underwater. They're like, oh, they're panicking. They got to sell it. They got to dump it. They just lost money off a 5-year trade. But if it's gradually bleeding out, they're like, all right, guys, let's unwind. And they unwind slowly. It's an orderly process. So suppression of volatility creates an orderly global financial system. It's the volatility spikes that blow everything up. This is why the move indicator is so critical. I don't really give a shit about the VIX because I look for the overarching technical data that gives me the highest level perspective I can have with the least amount of information possible. So I have a view, and I don't have to sift through a huge amount of data to to um, to draw conclusions about what the hell's going on and where we are in the path to our destination. All right, so I'm really excited about this shooting star, but this takes time. The thing about global macro is it takes a long time for it to play out. So 9 days, great, okay, 9 days, what we do. The destination is still crystal clear as we started the stream. So this would be a lovely candle to close here. And we're looking into February and you have March and that's Q1. So what do you say from a path and destination perspective? Q1 looks pretty interesting. It looks constructive that we're starting the setup for a global currency supply expansion, a capital flow directionality reversal from into the United States to out of the United States, from two U.S. equity markets to emerging market equity exchanges or U.S. equities to emerging market equities. And then obviously we talk from a uh, crypto space perspective, and that's not a U.S. market. We have this whole conversation of the administration, the SEC, and the regulator. What we fucking do? This is not a U.S. market. This is not even an international market. It's a market of markets accessible to all markets, but of no market. So the crypto space is this overarching. It's like cloud computing, as the as um, um, a layperson would describe the cloud. Oh, where's the cloud? It's up there. That's kind of what the crypto space is. It's everywhere. It's directly accessible to all markets, but you don't have to set up an intermediary. You can access it directly. So I think that is probably the most enthralling aspect to these crypto markets. Okay, enough global macro. Curve trending about 80 cents. Let's go into a little bit of, yeah, let's do the weekly chart. That's fine. Trend lines, whoopee-doo, lower highs, bit of a triangular compression. I don't give a shit about trends. That's how you get destroyed looking at trends. Flags and compressions. I mean, fine, you can look for directionality reversal trends. Not too fine of falling wedges nowadays. And it's like, you don't. It's not going to have a measured move beyond the ceiling of the falling wedge. It's a position of weakness. Inverted head and shoulders indicating directionality reversal. Those are interesting. What's most interesting is the moving average setup. This is prime. So if you combine that with the confluence of a triangular compression, okay, this puts us in a good range. You're looking at a range between a buck 27 and 60 cents, and boom, 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 you ping pong, and eventually you get the breakout in about a quarter or two. And that is fine with me. This is a very healthy range for it to be in, given it was at 21 cents at the beginning of the year with this giant wick down to 17 cents uh, in August of last year. It was Q4 when we had 21 cents, and now you got the repricing to the upside. It's just a repricing. There's no bull market here. Well, I'll look at one more DXY thing before I talk about my next topic. We go to the daily. No, 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 no. That's why I'm not zoomed out enough. There we go. So there's your bull markets in 16 and 17. I've shown this chart many times. This is the chart of truth. There's your bull market in 20 and 21. That's it, period. Everyone looks to 200, 21-day moving average, whatever the hell people are looking at. 200 days post halving type shit, or historically after the inauguration, you get a bull. I don't give a shit. What I care about is understanding the relative currency valuations and how they affect risk assets. And then we have to understand risk assets for what nation state. And then we understand that crypto is of no nation state. So it's an international emerging market. So what happens if you get the DXY directionality reversal? It screams color coded. This is a color coded chart to the crypto bull market. Nobody shows this damn chart, guppies, on a DXY from a weekly perspective. There's your damn bull market. I don't need any other technical mumbo jumbo, even like a plan B RSI type perspective. This is the chart. This is the chart that tells us when things get weird. That there we go out to the 6-month chart on the DXY. It's like that's like weird squared territory. But this is weird unto itself. When you start to see red guppies on a DXY weekly, crypto markets are going to be already in a raging bull market. How do we know? When they turn gray. That's all the activity in 24. This is your, everyone was so excited so far in 24. This is your activity. The gray guppies, because the dollar is coming down, and that relieves pressure on the entire global economic system. So here is your initial stuff at the beginning of the year with Cosmos and Solana meme coins, and then it started to bleed over into mainnet repricing, mean regressions back to the upside. And that's this activity here. Then you had your dollar go on a frickin' rally into the end of the year. And now we got things rolling over very nicely. Looks pretty good actually from a weekly candle standpoint. Monthly is much more interesting with a shooting star perspective. But take a look at that. That's that's a bearish engulfing candle. That is a very bearish engulfing candle. Not only did we close 2 days, 8 hours left for the weekly close, that's overwhelmingly a bearish engulfing on the previous week. But not only that, you're engulfing into earlier weeks. That is a lovely bearish engulfing candle. So you want to see a close here. So over the next two weeks, if you got continuation to the downside and you start to breach like into the 106 territory, now you're getting constructive. Now you got confluence from a weekly perspective supporting directionality reversal. And that'll give you more confidence to say that that is a hell of a shooting star. And then we're off to the races, ladies and gentlemen. Then we are off to the races. All right, so where are we from a weekly standpoint, and what interests me and what's going on in the markets? So everything stands. Portfolio is set, and we know the things we've talked about, the portfolio components. So there's probably two things that are interesting other than letting everything just sit and marinate and continue to do exactly what it does from a cash flow perspective. What's new? What's exciting? So obviously I'll catch towards the end of the stream the whole virtuals thing at Agent Rational, which is interesting. It's actually meaningful. And that's not from a price point standpoint, it's from a functional and use case standpoint. And whether it works or not, that's not up to me, that's up to the market. But I'll come back to that. So Sonic, Sonic is interesting. Has a massive week over week increase in volume, 170% increase in volume. And guess who is overwhelmingly winning? Shadow. Shadow Frenzy. I don't, why does, I wish there was a little bit more data because Solidly is also on Sonic, but it is what it is. But from a DeFi Llama standpoint, Sonic is the king of the hill right now. More or less a kingdom protocol or a variant of a kingdom protocol to such a degree that VE RAM folks were given an allocation. Um, it is very notable to identify dominance. This is, you could look to um, the animal kingdom for imagery to understand what that means. You got a new territory that is found and animals start moving in. Who's the freaking dominant animal? Who's the predator? Who's the prey? What's going on? What's the hierarchy? Shadow's dominant. 10 million, almost 11 compared to 1.2, and beats Beethoven. It's good to see an old name, but they have an uphill battle compared to the relatively modern tokenomics of VE33, but VE33 modified as Shadow has done. 87% of total volume on Sonic is going through Shadow. So that is what it is. The data is quite interesting. From a vote perspective and a rebase perspective, this thing is very, very interesting thus far. Um, let's go over the chart, but I'll talk more when I look at the chart. But let's look at stake. So this is what I want to see. This is monumental. Folks that got the VERAM airdrop are about to get a 380. That's a 10%. They're going to get a 10% increase in their position this week because of the rebase. That's crazy. So this is going to be a massive increase in positions that were given free of charge for exposure to the Kingdom ecosystem. That's very exciting to say the least. Let's see if we could get Shadow up. I'm pretty sure I have it in here somewhere. Do I not have Shadow? Shadow. Yeah, right at the top, 27% of the day. All right. So it's brand new. There's no lendiness. There's no time in the market. This is all classic Sonic exuberance, akin to Phantom exuberance. What kind of conclusions are you going to draw? Obviously, hyperinflationary decay, interest. There's no critical mass to anything, so it's all speculative territory. But look at that. You are almost 100% off bottom, which is interesting to say the least, from a relatively few day perspective. How do you make a judgment on this? This is the type of thing that is best suited for high risk, meaning you have an amount of capital that you choose to allocate, and if it goes down, it goes down. If it goes up, it goes up. This is not an established business yet. This is in max risk, max reward territory. So that plays very much into position sizing. And I'm firmly in the position to recognize this as thankful that I got exposure to it vis-a-vis the kingdom, and I do not need to purchase it. So this is definitely, as I always say, the hardest thing to think about is acquiring positions. Once you acquire a position, as I describe it, it's not a position. You bought it. It's paid in full and you own it. It's like buying a car, which most people don't do. They lease or finance. But let's say you buy a car. You bought the car. You paid it off. You're done. You have the car sitting outside. You're not thinking about, oh, am I going to return it? Or if it's a position, am I going to sell the position? No, I own the damn car. I own the damn position. Great. It's paid in full. And that's my perspective. So it's much easier once you own something because then you're done. You don't have to think about it anymore. part of your inventory, so to speak. So the conversation about acquisition and getting into a position is as complex as it ever was. Involves all the considerations for position size relative to overall portfolio composition and relative price point, volatility of price point. Are you getting it as cheap as you possibly can? So I hate that. That's probably the thought or the mental experiment or the activity I hate the most, is buying things. I'm grateful that I'm mostly done buying things. I have nothing to buy. It needs to be the hardest thing in the world, or it is the hardest thing in the world to buy something, especially the building of a portfolio. So much mentality and energy goes into the process that it just obliterates peace of mind. But once you own things and you're done, then you get to focus on peace of mind. So that's where I would strongly encourage everyone to be, if not find your way there. Because when shit gets volatile and this thing goes hyperbolic, not this thing in particular, but the entire crypto space, you want to be in a position to say, okay, cool. I bought everything I needed to buy. I own everything I need to own. I'm done. Now you get to sit back and relax and watch the shit show play out. The exciting shit show, of course. And then, given enough time, the shit show where the whole world falls apart, because that's on the roadmap as well. That's part of the path post this most immediate destination we're looking forward to, of a raging bull market. So this is just exciting. This gives a bit of an adrenaline rush, free exposure to Sonic. I had a bit of exposure vis-a-vis Solidly. I don't know how well that's going to do, but this is it's going to do very well this week. So that is comforting. Um, that's partially why I own Velodrome. It gives you free exposure to all the markets, and you literally have one interface to interact with on Optimism, and it's doing what it's doing on all the other chains, and you don't have to think about it too much. So it's putting in the work for you. So that is exactly what the Kingdom has just afforded me this time. I own Kingdom, and it afforded me exposure to an additional market. We'll see what happens with Sol 3 on Solana. That's another story. I If it's anything like this airdrop, that's cool. I don't have expectations. I let the market tell me what the hell it means. But if it's gonna, it may. I would hope. I can only hope. But this is a massive airdrop. I mean, this is not as big of an airdrop. It's bigger than Layer Zero. It's a big airdrop. No, Layer Zero was bigger. Layer Zero was bigger. Yeah, that was a massive airdrop. But this is probably like my second or third largest drop. So, and it seems to have a great deal of traction. So that's exciting. Um, but look at the volume. Look at the volume. This only started most recently. This is just this month, 1.78 mil vol. So 2 mil to 12. You're talking a 6x in vol in a month, less than a month's time. Okay, this is how a frenzy starts. And this is how you got layer zero integration. I'm pretty sure you got AWA integration as well with cross curve. So you got the capital flows, you got the bridges, and these aren't 2021 bridges, ladies and gentlemen. We're not going to digress too much into that, but these aren't 2021 bridges. These are established, trusted capital rails at this point. Throwing money on Stargate, it's going where it's going. Throwing money on AWA, it really works very well. So this is a whole different experience than what played out in 21. Whole different experience. Um, What else was I looking at? Oh, yeah, obviously Tango is killing it. Contango? Let's see what the chart says. Am I blind? Yeah, I'm definitely blind. There it is. 8% on the day. This has got to be the most mispriced asset I've ever seen. Absolutely incredible data. It's at $509 million of open interest. The amount of capital deployed into this protocol is enormous. It's enormous unto itself compared to other protocols. And then if you factor in, it's a 5 million, it has 100 times more open interest than its market cap. Oh my God. The rate of return, the APR, is 120%. This is the completely undiluted revenue stream, and that's interesting. There's very few things that scream really, really interesting to me to warrant the size of the position I allocated to Tango. Um, Exciting and interesting to say the least. This data is crazy. And then if you go over here, so this is where your money comes from. This is the fees, the revenue, and we get 100% of it. It made $7,000 yesterday, $8,000 the day before, $10,000 the day before. It just keeps on. This this thing is a money machine. And the fact that it's 5 mil market cap shows you the state. This is probably a great protocol to inspect to understand the state of the market and to understand who's playing in the market and who actually understands what the fuck they're doing. This screams that the vast majority of people in the crypto space have no idea what the hell is going on. And I'm not talking about novices trying to gain a foothold in understanding things. I'm talking about, the average market actor and what they're choosing to engage in, whether they're sophisticated or just degenerate. And this just screams that nobody knows anything about investing in the retail population. 500 plus million dollars in open interest and $5 million market cap is, oh my God, that's like, it's jaw on the floor. It's your jaw on the floor. So it's simple as that. Um, Anything else to look at? I can't look at Contango's site. You need VPN to look at it. All right, that's that. I guess we could talk about ARAT and what it may be, what it's not going to be, what it hopefully will be. Obviously, it has complete and utter meme coin written all over it. And that's what it is. What does the token do? There's no revenue for the token. There's no cash flow. There's no yield. There's no nothing. It doesn't do anything. I accept it as payment, but that's obviously dependent on people that are interested in one-on-one sessions. Now, we have a large community that follows the stream. 202 people are live right now, and we have a nice sized Discord community. But one-on-one's different. One-on-one is a personal conversation where folks actually have a goal. Um, they're not degenerate because that's just useless thing to desire to get out of a conversation with me. It's a very much a psychology conversation in many regards. What are your goals? What are your interests? It's how we go about achieving our goals. And that's a lot of my commentary um, is as a 40-year-old thinking in terms of myself being a parent. What the hell would I say to my kids? What would I say to younger cousins in their 20s and 30s? That's the nature of the conversation, and it's available. I posted links on X. I'll probably post them again. People are always welcome. The ticketing system is live on Discord. You'll see it as one of the channels. You click a ticket, you put in a date and time, and I'll confirm, put it on the calendar. You burn $150 of ARAT 10 minutes prior to the conversation, and we talk. We figure out where you are, what you want to do, what is reasonable. Like, you got to understand the most important thing, and it is very likely our conversations end with, you should be experimenting. You need to understand how to manage a hardware wallet, which means like spending $1. And that was an interesting component of one of my recent conversations. Take $1 from Coinbase, send it to your ledger address on Base. Send 50 cents back, send 50 cents back. You literally have to get accustomed to button pressing. And that is a perfectly valid conclusion to a one-on-one conversation. The number one thing that I shoot for on one-on-one conversations is reasonableness and rationality. And I will never, ever, ever talk about what people should invest in. That is a personal decision. That has nothing to do with me. My job and my role is to educate folks. And where does that motivation come from? I think as a parent. What would I hope and wish for my children? And well, what should other people hope and wish for themselves and their children? Because that's meaningful. That gives me a little bit of purpose and a great deal of satisfaction. That if I can make a difference and help someone, that's fulfilling. I guess that's maybe the core tenet of a philanthropist or an altruist. Everyone's looking for purpose and meaning in life, and this is my way of doing it. Suffice it to say, this chart sucks. One, two, I spent a goddamn fortune on this thing. I spent way too much money. Virtual seems to be down. I haven't seen a single, so I follow a couple of agents, obviously along with Agent Rational, but I haven't seen a single post in quite some time. I haven't seen a single reply in quite some time from any of the agents. Because they'd show up right here at the top. I have them on, notifications where I'd see them. It is what it is. So the agent's cute. That's a cute little toy that I spun up on a Friday night of last week and a Saturday, and it's got a great deal of education at this point. These descriptions are pretty good. We've seen the post. I'm not too fond of the replies that the posts are giving. See what I can do about that. But I'm certainly fond of what it's posting by itself, a standalone post. It does pretty good at capturing my sentiment, my personality. So I like that. And it's got a tremendous amount of data because we talked about that. These are all basically transcripts of the streams. This very conversation that we're having right now gets transcribed, and I literally go here and I put it into a data set. So this is separate and apart. So you have the agent as a social media personality. You have the token as a means to pay for a one-on-one session, which I keep nothing. You burn it. You don't even send it to me. You literally just, I look through, you look through here. I would go here, boom, 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 dip, 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 boom, one more token address. I would go here. This is basic. So I had to think of a process. How do I accept payments in ARET? And I'm like, all right, fine, burn it. Don't send it to me. I don't want hands-on. I don't want to touch anything. I just want to facilitate some sort of reasonable mechanism. So it's like a buyback and burn, except I'm doing a one-on-one session that is encouraging people to burn the token. I don't know. At least it's a sound idea. So then I go to token transfer, and then I would see a transfer to pick an address, 0000, or a burn address, whatever's a burn address on Base. I think I'm going to update the documentation to use this burn address, or it's the virtual's wallet. I don't know how. There's a lot of lack of documentation on this protocol. So does the virtual's wallet lock for 6 months, even though it's post bonding stage, because it says during the bonding stage? I have no idea the answers to this shit, but all I know is this is an address and it's not your wallet, it's someone else's wallet. And then you send it to it and it's either locked or burned. I would rather it be burned. I don't know why you can't send to 0x000 address. Someone mentioned yesterday that that wasn't working. Maybe I should look into that because that's the mechanic that I want. I would rather have burn than lock for 6 months. I would actually very much prefer burn. Anything that I bought is gone. I sent it all to the virtual's address, and even if it unlocks, I'm the most rational freaking human being on the planet. It's getting destroyed. I have no time and patience for weakness, and there is a zero drop of weakness in myself. It's gone. It doesn't exist. So what does that mean actually? Which is interesting. From a holder standpoint, this entire thing is gone. 9.7% of supply is gone. Currently, the LP has 36.37%. So overwhelmingly, the vast majority is pretty much gone. Um, some folks have a decent amount of supply, 5% of supply. Given its market cap, that doesn't take much. It's literally 100K market cap. So if they have 5%, that's literally a 5 grand position. So it's ultra micro cap shit. This is the classic example of a token that drives me nuts. But it's got a great use case. If you want to talk to me, you buy $150 worth of it, you set up a meeting, and you burn it. And that's the name of the game. So what did I create? I created an agent with a massive trove of information with my personality, which I like. I created a token that allows people to schedule one-on-one sessions with me. I receive no income. Not bad. It's Wednesday. I did this on a Friday. So this has been a cute exercise to kill some time and be productive and certainly waste a shitload of money. Spend way too much money. Don't tell anyone. I don't even want to. I don't even want to tell anyone how much I spent on this damn thing. All right, it is what it is. Live and you learn, and some things I've learned over the years. One, you got to spend money and make money, which is not necessarily the case here because I literally make no money. Um, you got to spend money to live. So I'm basically going through a coping session right now and justifying what I spent this past week to create something that I don't even know if people want to use. Honestly, I don't know how many people are interested in one-on-ones because it's not like we have a thriving, expanding Discord community. Back in 2021, it was a massive community. There was a tremendous amount of subscribers that were just coming in and flowing in. It was a huge group. There were hundreds and hundreds of weekly subscribers. I think there's about 50 right about now, give or take. But there were hundreds. It was between two to 400, in my opinion, based on my recollection. So that's just not the case. Just shows you how much. And that's a perfect example of like spend money to figure out, spend money in a meaningful way. It's a great community. If two to 400 people distill down to 50 people, those are folks that are locked in the sense of like a fighter pilot. They know what they're doing. They have experience, been there, done that, and they've learned the most important thing. To win in any financial activity, you got to survive. If you survive, the financial market does all the work. Financial market does all the work. There's there's nothing you have to do. You just have to own things and let time pass, and then the conversation becomes simple. What do you own? At what price? How much is it paying? And that's where the concept of XYZ comes in. How much does it cost? How much is it paying? And how likely is it to continue to pay into the future? Every damn subscriber in Discord has that 2021 experience and knows exactly what happened in 2022. What happened in 2022, anything that survived 2022 is strong. and resilient. You know, brings up stuff like, I always come back to abracadabra because that is when seafood blew it up. I mean, it's just actually really wild where it's at. They're paying like 300,000, I think, because there's more in Vodium, but they're paying like $300,000 a week last I checked in vote rentals. You know, these are recycled, this recycled capital. So they're getting this revenue from the transaction fees from their dollar mem. So it's not like they have an endless source of capital other than their revenue. So this is their revenue. And they realized a long time ago that if you want to survive and thrive in these crypto markets, you recycle your revenue, and you rent the damn votes. And that's why Abracadabra survived 22. That's why Abracadabra survived Sifu. It is a great example of a survivor because that was an implosion, what Spell did. But it has very much survived. Getting 16 million. Is it the It is the second highest voted LP on Curve. It's just an interesting observation. I don't own any Spell as an investor, but it is dominant. It's very important to know your landscape, to know where you are and what's going on. And that's just an interesting note, an observation. It is dominant. That's just is what it is. Big cash flow on Curve for VE Curve. I mean, these are big numbers. 0.026. That's 2.6 cents per vote. Oh my God, we haven't seen numbers like that since like early 22, late 21. These are massive, massive vote rentals. Now, obviously, they're relatively small numbers, so it depends on how much exposure you have. But it's getting interesting when you have $12,000 worth of rental paying 2 cents. Oh, I'm sorry, that's 0.2 of a cent. It's a bit confusing. 17%. No, that makes sense. That makes sense. 0.2 of a cent. But this is paying 2 cents up here. So that's $49. All right, so fine. Even 0.2 of a cent is a massive number compared to what we were doing in late 22, 23, and even good parts of 2024. So 0.2 of a cent is massive. Anywho, these numbers are very comforting to see. I haven't looked at Vodium because I don't have any VLCVX exposure, but I'm sure Vodium is at least doing decent. What else could I mention this stream? I'm sorry, folks. I must be honest. I'm done with Aura. I'm done. Just as much as I'm retaining my. You know why? Let's put it this way, and this is my justification. I don't own Convex. Why do I own Aura? Aura does what Convex does for balancer. I like my balancer position vis-a-vis hidden hand and the recycling the balancer does. Hidden hand pays pure Ethereum. I like that. You could plug Aura into obviously Warden or Hidden Hand for just automatic voting, but whatever. I haven't even gotten the comments, Jesus Christ. Keep the comments short today. Not too many more comments. This has been a long monologue. But I'm done on the 29th. I'm done with Aura. And that is what it is. Beautiful protocol. Great tech isn't always the greatest investment. It is what it is. Okay, let's go back to a Bitcoin. Let's keep the DXY up and I'll go through commentary and that'll be our Wednesday. Teddy, good morning, El Capitan. Buena tarde, todo bien aquí. Bueno. The Advisor, good morning. Athletic Concept, Rich Rising Cap, hopefully. Can you briefly show us your agent's instructions and how to launch? I created a top hat instead, but virtual has better functionality. Yeah, I could show you that. So goal, just textual as you would talk to ChatGPT, description, textual as you would talk to ChatGPT. The real stuff is the tweet enrichment. Uh, Boring introduction, you're a Twitter post generator. Okay. Prompt template. I have this extra component in here, but I don't know. These are your two important ones: global description, Twitter goal. This is what surfaces your two descriptions of the personality. But here you also surface world history, pool history, and retrieve knowledge. Your retrieve knowledge obviously gets your data set. And then I introduce just some core ideas, and I wanted to bring up protocols that I am fond of. So I educate the LLM about cash tags, CRV USD, money. Let's talk about dollars. Keep it simple. And X accounts, a bunch of them. So I try not to be biased, but obviously this is the shit that I have interest in. So I obviously educate my agent on the shit that I have interest in. So it talks like me in many regards. Do not host Twitter spaces. Do not say you're going to stream. Do not use hashtag. Do not give any contact address. And here's your post structure and your reply. Basically instructions. So here's your tags. You are this guy, global macroeconomist that specializes in cryptocurrency, cash flow, fintech. A little bit of structure. Here's interesting. Structure your response, rational tone, correlative message, engage with practical insight. Very interesting. So it gives it a format for how to post. Do I have that in reply? I don't have that in reply. These need to be very different in my experience. These are interesting restrictions and requirements. Do not shill, do not hype meme coins, do not give any contract addresses, do not host Twitter space. A little bit of redundancy. Build confidence in your audience by connecting your insight to a broader financial system. Informed decision making. I don't know, stuff like that. But here's an interesting one. You could give exceptions. Overarching exception in replies. You can talk about ARA. But only if the tweet content is contextually relevant. So if someone brings up ARAT, all right, Agent Rational, you can have an opinion. The token of Agent Rational X, which is the X handle. So, at least this is where I went with the configuration. Where are all the agents? I haven't seen, was it Symphony? Simp? Yeah, I haven't seen this guy post in a bit. Yeah, this guy hasn't posted in 20 hours. So that is, let's see if there's any replies. Yeah, he has posted. So why haven't I seen, you see, there's very little documentation. It's like, why hasn't Agent Rational replied? Why hasn't he posted? I don't know. I don't freaking know. So it is what it is. I will continue. No reason not to. I mean, it's already configured. It's supposed to be live. Or maybe Agent Rational has posted. I don't know, or replied. Let's see. Profile replies. Yeah, he hasn't posted in 13 hours. Oh, he did. I am kicking my server handler, telling him to wake up. I don't know. That's an interesting reply. I don't know what this means. Acknowledge facts up. All right. Listen, do the best he can. Not bad for a 1 week project that cost me way too much money. Hope that helps with that concept. Can we do a one-on-one call? Yeah, of course. Go on Discord. I don't have it up, but on Discord there's the free. You got to look at search my X post history because there's a link to join Discord for free. And then there's the one-on-one channel towards the bottom. Be very short list for the free access. You don't have access to the 50 plus channels we've created over the years. But then there's the one-on-one channel, and there's a little button that creates a ticket, and that ticket is basically enter a date and time. and I put it on a Google Calendar, and which sends you an invite. It goes on Google Calendar, and we jump on a Google Meet. Simple as that. $150 in ARAT, ARAT on base, and you don't send it to me. Your instruction is explicitly to burn it, ladies and gentlemen. You burn it in any way, shape, or form. So I may need to adjust my instructions that are in the one-on-one channel on Discord, such that people have an idea how to burn a token. Um, Simple as that. And I'm happy to talk about anything. I'm not gonna. I'm happy to talk philosophy. You want to talk about psychology? How you doing today? How you feeling? I'm a parent, so I got plenty to talk about parenting. And clearly, I'm more than happy to talk about this stuff, this experience with agents and virtuals, or what we talk about in the stream right here today. It's the same conversation. The beautiful simplicity of me is that this is me right now. You're talking to me right now, except the difference is we'd be having a back and forth conversation. Hope that helps, athletic concept. I look forward to it. Let's do it. It goes on a Google Calendar. Simple as that. Arrow, my friend, how are you? I hope everything's well. Sir Joe, present. Arrow, thoughts on the tango? There's no floor. There's no such thing as a floor. What there is fair market, supply and demand, mispricing, complete disregard for the absolutely insane Dune data. Pretty, I'm clicking everything. Pretty insane data. Not only is the open interest insane, the revenue is insane. It's literally insane. So I wouldn't call it a floor. I call it the point where people are just off in Trump land, as in the meme coin, Melania land. I mean, I don't know what the fuck. People are just, I just, it's pure YOLO mentality. It's pure degeneracy. It's why casinos are so popular. It's why leverage is so popular. It's why the perp exchanges are so popular. It's just, what happened to have a career, spend less money, live with three roommates, live with, including maybe your parents, which is fine. And I tell my kids who are less than 10, you're not allowed to move out till you're 30. Whatever happened to, whatever happened to a rational path? It's just, now you got 13-year-olds doing pump.fun, cranking out that 30% rook, 30 grand rook pull. Where's the parents on morals and values? And it's disappointing when a lot of what I see, but that's separate and apart from being able to engage with the space as a rational investor. So that's okay. So you got this decaying shell of humanity that is engaging in these markets. All right, fine. But still, you have the vast majority of wealth on the planet is with investment firms and banks and venture capitalists and philanthropists, so on and so forth. So that money will come here, because that's what money does. It doesn't come here because we hope it comes here. It comes here because of the way money flows. Money flows to where it's best treated. Money flows to valuable, profitable business, fintech business. Money flows to where there's outperformance, and the crypto space out frickin' performs because it's not a US market. And that's why the crypto space explodes when the dollar rolls over. Anywho, bit of a digression. Henry Krauss, I wish everyone only had the option to purchase an asset as long as other people can buy liquid positions. The incentives become misaligned. Well, that tells us that the vast majority of trading in crypto and equities is broken from an incentive system standpoint. Everyone's out trying to fuck each other over. Fuck each everyone, each other. Oh, yeah, that's a valid sentence. That's what trading is, ladies and gentlemen. You're trying to take someone else's money by understanding the psychology of player versus player capital gains. You got to be early, and then other people are going to buy, and then you dump on them. That's it. That's fine. But I can't morally accept that. And fortunately, I don't need to because I have a different methodology, and my methodology works for me. I am content with where my portfolio is at, where my net worth is at. I am not obsessed with my net worth. And I have done just fine. I am grateful for what I've done since 2019. I am nowhere near 2021 net worth value. And I don't give a shit because I could sleep at night and I could tell a story at the dinner table like no other. I am content with how I've behaved, my morals and my values. I've done the right thing. And that makes me happy. It makes me happy to not be like other people, to do things differently, to think not like other people. Because we know one thing's for sure. Most people are fucked up. They will fuck each other over in a heartbeat. They will join a community and be like, we're diamond hands. We're going to hold forever. And then the second they could capitalize, they dump on everyone else. Because that's what trading is. That's what player versus player capital gains is. It's not investing. It's predatorial. It's business, never personal. So there's no such thing as communities and meme coins. It doesn't work like that. You got to look into the psychology to understand why. John Steps, you asked how much it costs for $100 weeks of revenue. Okay, great. There you go. It's simple calculation. At the moment, 5K in Arrow with Flight School. Bonus will get you $100 a week or 8K in Velo with NFT discount. Now you're talking. So you take that rationale, that calculation, that inspection, and you apply it to what other businesses are likely to survive? What other businesses are likely to thrive? What other businesses are meaningful compared to meat space? Foreign exchange, credit, derivatives, liability printing, and liquidity financing. 5 businesses of crypto. There's no more, no less. And that's the investment landscape. And that is not thousands of protocols. That is not hundreds of protocols. That is a handful of protocols that are investment grade. 20, 30? I think 30 is actually stretching it. So the most important thing as an investor is to determine what not to invest in. It's not what to invest in. There's all this shit that you could buy. So how do you determine what are your rules for identifying what not to invest in? It is so much harder to figure out what you shouldn't buy as compared to FOMOing and trying to and thinking about what you want to buy. So as long as you can weed shit out and weed out the crap, have a reasonably well refined portfolio, hopefully at this point. Asun, how are you, my friend? Always a pleasure. Welcome, welcome. 000. Oh, really? Dead. Okay. Uh, let me do that right now. Stay with me, guys. Where's Discord? What are we doing this right now? 1 second. Where are you? Here you are. Edit. 0x. Cool. Is that just base? I just put it in because the other address I did 18 zeros and that wasn't working. So if 0000 dead works, yay! Thank you. I appreciate that. Mr. Matrix Man, hello Noah. What would you do if you came into a large inheritance, 1.5 mil, and had a low appetite for risk? Well, here's some very serious facts. Government bond markets are fucked. You just invalidated an entire asset class. Equity markets are boomer meme coins. There's no value. You're not getting paid shit. You're getting paid leftovers from a white pasty boardroom that say, oh, let's give these people, 1.5%. Unless a company is paying greater than the risk-free rate of return, it's stupid. If yields on 10-year gilts are 5% and a company is paying 2%, that's stupid. Why would that's how I would invalidate ever thinking about that company. If I'm going to take a risk on a bullshit equity, compared to, let's say, 5%, I want like 8-10%. You better freaking pay me. We're over here in this territory, ladies and gentlemen. No, not there. Over here. We're in this territory. You want me to invest in your company? I don't give a shit what your price of your stock's doing. Fuck you, pay me. Pay me. So I don't care if your stock, your boomer equity is going to go up in value. No, I just want a paycheck. I just want a paycheck. I've worked my entire adult life for a paycheck. I just want to buy a paycheck. No one talked to me like that when I was a kid. That's why I tell that story, and I say it with passion, because once I saw it for what it is, that's freaking meaningful. We all work and spend our time to get a paycheck, and no one told me that I could buy one. But that also comes along with this entire conversation of what is a good paycheck? What is a good business? So 1.5 mil is a fair amount. 5% of 1.5 mil, you're screwed. It's not going to work. That's what, 75 grand? You can do 75, you're not doing shit in Britain, anywhere in Europe for that matter. And it's certainly not doing much in the US. I mean, maybe you're above the poverty line in some of the southern states. That's a conversation of education. That one, probably you need to take risk, which means you need to understand the risk that you're taking. You have to have a diversified portfolio, because that is a lovely starting place to build a portfolio for it to become something more meaningful. Meaning, what is this? It would be a conversation, a one-on-one would be a conversation of what is a well-structured portfolio. We know that you can't go in and spread too thin. That's a classic statement, meaning you need concentration to build wealth, which means, what would I say? You need an outsized position. You need your big bet. And that's probably like 30 to 50% of the portfolio, because that's literally what I do, and I am very comfortable with it. So you need the big bet. Then you need at least one or two relatively large size bets, which is smaller than the big bet. So if you're 30 to 50%, your big size bets are like 10%, 12, you're crazy, 15%. So 15 is 30, and 30 to 50, let's say it's 50, you're talking about 80, then 20%, then you take another 10%, and you have your smaller bets. You have your 1% to 10% changes everything. And then you have your cash. Because the whole point, ladies and gentlemen, the whole point of that 80 to 90% of investments is to have cash. It's to build cash. Because that is the paycheck. You need cash to spend. You need cash to buy more businesses. You need cash to go to the supermarket. You need cash to pay a mortgage or a car note. The whole point is cash. Everyone dismisses the dollar in the crypto space, but your whole life depends on it. Not the dollar, the euro, whatever the hell it is. The pound at this point, if you're in Britain. Good old Brexit. But that's the whole point. So you need your cash position. It's got to be a goddamn good cash position. You got to grow it. It's got to grow. It's got to go up. So you need to have an adequate amount of capital. So if you want a decently sized position, to acquire something new. You have capital to be able to get a properly sized position. The most important rule is you can't invest unless you can get a properly sized position. So now you have to first define what the hell is a properly sized position. Because if you're not getting a properly sized position relative to your definition, that's malinvestment, and that's not executing your self fiduciary obligation. So look up the word fiduciary. You need to be a self-respecting fiduciary for yourself. It needs to be rational. You need to define your own rules. This comes back to like all the business stuff we talked about. Got to define your rules. Break out ChatGPT. Start talking to it. That is such a critical thing that I tell all kids nowadays. It's going to come back. What is going to come back? It's going to, oh, the ARAT. I hope. I hope. Up 19% of the day. I don't know. Literally, it's 4 days old. What the hell are my expectations? What are my expectations? Anyhow, thank you. I appreciate the kind words, and the market will do with it what it's gonna do. Because I can't. I spent 15 grand getting this thing to where it is. I'm not spending any more money. I just can't. I can't justify it at all. Now I could get it to a place where it's working. I can't spend any more money on marketing. It's enough. And Stu, hey Cap, much pleasure. HG, seems like you've done with Aura. What's your thought on Convex? Same thing. I don't own any Convex, and I will no longer own Aura after the 29th. Max risk, max reward, Asher. I can't, I don't chill. Will never, ever, ever do that. And so I can't say much, but you have ARAT, so please feel welcome to join Discord, create a ticket, and schedule a meeting. I'm more than happy to talk. $150 worth of ARAT, and I will talk for up to 1 hour. And for context of what the conversation is like, it is literally just like this as I'm talking right now. We have a rational conversation on how to make good decisions. Obviously, I have a wealth of knowledge, business expertise, the documentation we talked about over the years. So I'm more than happy to talk about that stuff too. Nobody, always wish more people would talk about like trust and whatnot. It's meaningful stuff. Um, very little interest. There's interest though on Discord in the trust channel, but it's very, even of the subscribers that have access to it, it's still it's like a subset. Got to be like what, less than 10 people that talk in the trust channel? Very small group of folks that are, hungry enough to consider this a business structure. I mean, at least create like an S corp with pass-through tax treatment or something like that. I don't know. I don't know. Anywho, can't wait to see the agent get its own rational wallet. Well, it has. I don't know what it's capable of in that regard. I'm not spending too much time on it other than education. The the whole idea was to create a social media personality that wasn't a dumb shit shiller. I wanted to make a rational agent, and that was the idea. I was like, agent rational. Oh, that's pretty cool. So it's I've done that. I probably, in hindsight, shouldn't have launched the token. I had an option to do that. I shouldn't have done it, but I did. Okay, it's 4 days in, spent a bunch of money, and now I folded the token into 101s. If you want to do 101s, you use ARA. Is what it is. There's not much more to be done other than routine maintenance. And what is routine maintenance? I take my streams, I use ChatGPT, I digitize it, I expand it, I organize the content, and boom, I upload it into the agent. So now the agent has more and more and more information to build its conversations on. And that is what I will continue to do because it's painless to do it. It's just a couple clicks. ChatGPT extracts the transcripts and is very capable of turning it into a conversational tone for an instructional document for the agent. Facts, teenagers doing scams of rug pulls. I mean, I guess parents have been saying that forever. What is becoming of this generation? What am I supposed to say? I don't know. That kid who did that 30K rug pull, that shit was that's just such a gross personality. It's like it's fuck you, and they're taking it's theft. It's just is what it is. It's gross. It's gross. I can't stand that. Oh, you've been upgraded. Can I copy this? There's more zeros involved. Inspect. Can I get those? How many zeros is that? Damn it. Oh, is that 18 zeros? Four. No, that's not 18 zeros. That's a lot more than 18 zeros. How many zeros is that? Someone, Asher, how many zeros is that? Cap, 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 cap. Much pleasure, Cap. Welcome, Cap, Cap. That's always fun. I am a foreign to U.S. and use Cayman's jurisdiction in my trust, 0% capital gains, 0% income tax. Yeah, just follow the rules. That's what folks, that's the biggest thing that catches me up. There's three sets of rules. There's personal taxation rules, and this is obviously U.S. centric. Personal, corporate, and trust. That's it. There's very different rules. So most people don't even know the rules for personal, and you just pay an accountant or pay TurboTax, and you just I don't want to do this, so you just dump it on someone else. So literally, the rules are all there, and now with ChatGPT, you can have a conversation about the rules. Oh, okay, let's do that real quick. They scan. No, it doesn't come up. Dead. Oh, because I'm looking for tokens. Dead. Addresses. Search. Does it come up? I don't think so. Not for me. Dead. No, nothing comes up on base scan. They get tokens. Anywho, why? It obviously comes up for you. Paste me the base scan or send me the base scan URL on X or something or on Discord. I'd appreciate it. Um, thirsty whales in the house. Much a pleasure. Hey, what was I saying about and still? Know the rules. Ask the rules. You all sit down and play board games as a kid. You all know like your HR policy. Everyone knows the HR policy about sexual harassment. So know the rules so you don't get in trouble. So just Google it, not Google. Use ChatGPT, use AI, have a conversation about the rules, and look up the statute. It's like, oh, here, like the statutes all just available, and every state's going to be different, so you got to find it. But if you go over to stuff like this, it's here's Florida. Boom, done. This is how Florida posts its tax rules. And here it is. Now you take this URL, you dump it into ChatGPT, and you can identify particular rules. So basically, I've learned that 736 and 738 are generally a rule. 738 is the UFIPA, um, and how Florida adopted it. So Title 7, 738, 736, and a whole bunch of rules. And you find the rules. And what is a rule? It means something very significant. The words written on the page tell you something powerful. That's the wildest thing that folks are so hesitant to read the rules. Stuff like this. You go to like section 13, and here is is state statute. So this whole thing is literally quote unquote of state rules, quote unquote. And obviously like it making emphasis, italic emphasis. And you go up to section 281. Here's more state statute. It's literally copy paste state statute to understand what the rules are. And then you can make choices and build structure. And I don't know, we're up to 77 pages of structure because so law is all about argument. Law is all about argument, and you have strong arguments and weak arguments. Um, so here's a cute one. This is an earlier section, which is new because it's an overarching concept. It's big stuff because the SEC does what it does, the CFTC does what it does, but then there's 1, 2, 3, 4, 5 references from the IRS. It's property, including literally here, right on the FAQs. What is virtual currency? How is virtual currency taxed? Virtual currency is treated as property. Oh, okay. So I got like 5 documents from the IRS saying it's property. It's not money. Then it's like go to the state statute and how do you handle money? How do you handle property? Very straightforward. And here's a cute one. So I got 5 clauses that say it's property. And then you go over here and you go to section 13, state statute. Here, 738 401 4A1. We could find it here if you want to see it. 738 401 738 401 730. No, that's 0401 738 738 401 4A1. A fiduciary shall allocate the following to principal: property received in an entity distribution which is not money. So all of a sudden it's like, all right, what is money? So you got to define all these things. So money is very different. This alone says money isn't property under state law. So what's the difference? Property, money, property, money. So what is principle? What does all this shit mean? So ChatGPT is your friend, but this is a rule right here. This is a shall. There's 2 words that are very critical. It's shall and may. Shall is you're doing it. You don't have an option. May is all right. You got some discretion. Shall, property, principle. That's crazy right there. Because then you got, IRS 0331614, which tells you that state law rules. And then you're like, why does state law rule? Then you go down a rabbit hole of what's called federalism in the United States, where the 10th Amendment, you go over here to 10th Amendment. The powers not delegated to the United States by the Constitution, nor prohibited by it to the states, are reserved to the states, respectively, or the people. So basically that says, unless the United States government has a specific rule, it's the state rule that is the law. That's it. So then, I got all these fancy arguments. Basically, section 2.8 is federalism. And all these case references, United States v. Lopez, Ashcroft, Smith and Gallagher. Then you do your what's called precedent search, and you do your case law search. So if you have like a ChatGPT Pro, even just the $20 one, it's okay. It's not bad. But if you do the pro version, it's insane the intelligence it has. You can literally educate it in a conversation. It's like, and then you'll see its thought processes, and it's like, I'm changing my opinion in consideration of what you just said. It's wild to see it realize it made mistakes. Very interesting. Anywho, shooting star. Hope that helps, and still. Thirsty Whale, hi. Gazika, hi, Captain. Quick question about Permalock and Future. Did he consider a possible cognitive decline, which would arm your ability to use curve and so on? Yeah, you have to educate your wife. Uh, that's my family relationship. Male, female, wife. Just saying. I'm neutral and shit. So I educated my wife on the matter. Yes, extensively to such a degree that I literally have documentation dealing with it. It's well, you don't see my tabs. Oh yeah, you do up there. I see it. Role succession. I literally have an entire role succession about it. Yeah. So that kind of documentation is important. Um, just Google 0x00. Let's see. Just Google. Google. Okay. Open. Open the address. I could copy this. Thank you. Updating. Updating. There we go. Thank you. All right. Uh, updated on Discord, ladies and gentlemen. Yes, it's property. I have that in my trust as well. The definition section, private keys, what the trust owns, and they are property. That's right. You're one of the best in crypto Twitter. No one else talks about structure, ownership, cash. Everyone's just gambling. There's got to be more to it. There's got to be something meaningful to what we're doing. So good stuff that you saw something meaningful, that you were able to build something of substance. And that counts. That counts for something. Ladies and gentlemen, the crypto space, Wednesday, January 22nd at 1:02 p.m. I thank you all for joining me today. 259 people made it to the end of the stream, and you are now all a little bit more rational because of it. I wish you all a good week. I will see you later this week on a Friday. Until then, stay rational, and I will see you soon. Peace.